Hello, Silicon Valley. Come on, hello, Silicon Valley. So welcome to Idea to IPO. My name is Rob. I organize Idea to IPO. We've been holding events in Silicon Valley for many, many years. We launched officially on February 1st, 2010.
Wow.
At that time, I'm not done. At that time, we had no members and no events on our calendar. At this stage, we have over 600,000 members among all our meetup groups all around the world. We've organized, promoted, and produced over 4,300 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. Now, Bill. And as I mentioned, we launched officially on February 1st, 2010. What day is today? You're good. Yeah. So 14 years is a long time. We hold venture capital panels, legal workshops, networking events, and more. We hold an event every day of the week. Check out our schedule at ideatoipo.com. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the greater San Francisco Bay Area? Who here was born and raised in Silicon Valley or the greater San Francisco Bay Area?
Wow.
All four of you. Well, welcome, natives. Whether you were born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it is important that we provide value at each and every one of our events. Not just value for your money, which is important because we know many entrepreneurs are struggling financially. So we make sure our events are free or affordable. And if you cannot afford to cover charge for whatever reason, come talk to me and we can work something out. And at most of our speaker events, we make sure that we provide a delicious buffet. Is that a delicious buffet? Is that a delicious buffet? More importantly, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Besides that young man and our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. Tonight, we're grateful to the College of San Mateo for hosting us at this beautiful venue. Is this a beautiful venue? Is this a beautiful venue?
Beautiful.
Some of our other partners are here tonight. I would like to have them say a few words. Let's hear it for Ken and Cordify. Applause.
Hello, my name is Ken Morris. I represent Codify. Codify is a software development firm. We do software development for startups. Most of our customers are startups. We've been doing this for about 10 years. We do everything from ideation to MVP and everything beyond that. Most of our customers come to us at the ideation stage. We have them sit with our solutions architects and they come up with a plan and a design, and we work on the wireframes and then build the product from there. Typically, we actually try and restrict the MVP within a shorter period of time, 4 to 5 weeks or 6 weeks, so that the entrepreneurs or you can actually go ahead and start looking for your customers, looking for your investors. We also have a service called fractional CTO services, where most of the founders, most of the companies sometimes don't find a technical co-founder. So the fractional CTO service, we have a panel of CTOs. You can pick from them one of the CTOs who will actually be your CTO who actually works with you to build the architecture, to build the team, and even go and actually pitch your product to investors. So definitely do come and talk to us. We have a table here, and we're happy to talk more about our services.
Okay.
All right, next up we have Patricia from Graham Adair. Applause.
Good evening. My name is Patricia. I'm one of the partners at Graham Adair. We are an immigration firm specializing in employment-based immigration. We can assist with everything from non-immigrant work visas all the way through the green card process. We are outside, so please stop by and ask us any questions you have. Thank you.
All right, next up we have Albert from Albert's List. Applause.
All right, I'm Albert from Albert's List. We are the Bay Area's most active, most prolific job search community, bar none, with 50,000 members, including hiring managers, job seekers, professionals, entrepreneurs, and more. You can visit us outside where we have a table, and we host everything from job seeker boot camps to workshops and more. Visit us on Facebook at Albert's Job Listings and Referrals, San Francisco Bay Area.
So though our local mission is to support entrepreneurs here in Silicon Valley, our global mission is to democratize entrepreneurship and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea-to-IPO. Check it out. We have tons of videos there. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Our partner in this endeavor is Tim Jeggers, one of the top professional videographers and digital marketing experts in Silicon Valley. Let's hear it for Tim. Applause.
Thank you, Rob. Hello, everybody. I'm Tim from Pacific Bay Media. This is a production company that I started up about 5 years ago. I picked up my first camera like 20 years ago, kind of started turning to work 10 years ago. And then I kind of bootstrapped, like all the other entrepreneurs out there, just built it up. And now I got a team that works with me, and we specialize in videography, but I've also been doing photography for a long time. And with video, you incorporate all those elements. And then we even work with some of the like delivery, like social media, website content, SEO, all of that stuff was things I had to learn in order to grow my business. And yeah, so there's a lot of stuff that revolves around the multimedia work that I do. Main emphasis is video, but I've had to learn everything else. And that's pretty much what I do. So if you have any questions about that, I'll be in the back, kind of working right now. So after the event, I'd be more than happy to talk if you have questions. And thank you for coming. I'll go ahead and hand it back to Rob.
So here's the schedule for the rest of the evening. Our panel will hold a brilliant, compelling, dynamic, entertaining, and scintillating discussion. Right, panel? No pressure. At the top of the hour, 8 o'clock, we'll open it up to questions from the audience. We'll wrap up the program at 8:30 p.m. Stick around, network, socialize, connect. There is an after party. More on that later. So without further ado, I'm going to hand it off to our distinguished moderator, me. First, let's take a survey of the room. Who's an early stage entrepreneur? I can't resist. What's the difference between a pizza and an early stage entrepreneur? A pizza can feed a family of 4. Just kidding. Who is the founder of a venture-backed startup? No. Who's the founder of a startup that has had a successful exit? Wow. Who's the founder of a unicorn? No. So who's a government employee, enterprise employee, academic, media person? Okay. All right. Who's here to enjoy the delicious buffet? Oh, they're all out. They're all outside.
There you go.
So, panel, let's just do introductions. What do you invest in? What's your background? What kind of checks do you write? Do you still write checks? Bill.
Sorry, all at once?
Yeah. Why not?
Really? All at once? Okay. Hey, great. So thank you so much, Rob, for inviting me and organizing this wonderful event, this wonderful venue. My name is Bill Reichert, and I'm a general partner at Pegasus Tech Ventures. Pegasus is a global venture capital firm. We've got over $2 billion of assets under management, offices around the world with our headquarters here in Silicon Valley. We've invested pretty much across the board from pre-seed up to pre-IPO. We're investors in SpaceX, in 23andMe, in DoorDash, in Headspace. We've got about, I think the last count, 29 unicorns in our portfolio, and then another 220 companies that are all hoping to be unicorns in our portfolio. So we invest across all stages, pretty much all technologies, a lot of different geographies. So we're very, very broad. What's unique about Pegasus is that we have a network of 40 plus multinational corporations as our limited partners. And our model is to go find emerging technologies that are of strategic value to 1, 2, 3, or more of our corporate partners so that we can both invest in the companies and facilitate collaborations that will accelerate the success and growth of the portfolio company and accelerate the innovation strategy of our multinational corporate partners. So that's a pretty unique model. People call it venture capital as a service, where we're working for corporations to find emerging technologies. I call it innovation as a service. In any case, we write checks from pre-seed to 25. I think 25. Our biggest check has been 40 million. But so we're all across the span in terms of check size. We generally don't lead. About 10 to 20% of the time we will lead. But generally what we want is a sort of brilliant, wonderful, like-minded co-investor from the venture capital community to partner with us in supporting our portfolio companies. So I think that's enough for me, right? Okay, thanks.
Hello, everyone. My name is Yash Hemaraj. I'm a general partner at Benamo Global Ventures, BGV. BGV, we are based in Menlo Park, but with offices in Israel, France, and India. We invest in enterprise AI companies, companies that are building with AI for enterprises, mainly with 3 components, AI, but go deep into the workflow automation and data. We like to see how these 3 things come together for enterprises. One thing about us is we invest in companies that are born in innovation hubs such as Israel, France, and India, and we help these companies make a transition to the Bay Area. All of us in our partnership have been on the other side, been operators, been company builders, and we try to bring this company building experience to companies that are making the journey now, especially founders who, as they're building cross-border companies from Israel, France, and India. With respect to our stage and check sizes, we invest in Series A, that's our sweet spot. We invest about $4 million in round sizes up to $10 million. Always either a lead or a co-lead, and we take board seats, and our whole motto is to be very helpful on the board and try to help the companies get to the next stage.
Okay. Hi, I'm Jennifer Vancini. I'm a founding and general partner of Mighty Capital. We're based in Silicon Valley. We're on our 3rd fund, so we're considered emerging managers, but we've managed to maintain top quartile kind of performance, returning DPI liquidity, basically cash on the table to our investors. That's one thing we focus on. Prior to Mighty Capital, I really built my career in strategic BD and corp dev in security and mobile industries. Helped take a security company public in Canada, back when we had to build the primitives of what is cybersecurity today before crypto meant money and that sort of thing. What's unique about Mighty Capital, a real key part of our thesis, which is Series A, B2B tech, software, is that we have a global platform of more than 500,000 product managers, which we use to help our portfolio companies sell into that network, where product departments, CPOs are having a much bigger influence in terms of what's being acquired, what's being purchased internally for use. So we help them sell, hire product talent, meet strategic partners, the whole ecosystem, similar to like Bill mentioned with his. I love ecosystem plays given my background. Our check sizes are $1 to $5 million. And we can lead or co-lead or participate. We lead about 30% of our deals. That's Mighty Capital. Silicon Valley based.
Hi, everyone. My name is Yoon. I'm a partner at Altos Ventures. Altos was started in 1996 here in Silicon Valley. We are technology investors, typically leading Series A's, sometimes seed, sometimes B, but A is kind of our sweet spot, with $5 to $20 million equity checks. And our whole approach to investing and company building is to take a very long-term approach to that journey. So thinking in 10, 15, 20-year timeframes and being structured in a way to support the entrepreneur journey throughout that entirety. And so as early investors getting in at the Series A, we start the relationship, and then over time, we have a lot of flexibility and capability to further support the companies that we back from the early days. So the follow-on investments that can happen over those 10, 15, 20 years can go up to the hundreds of billions of dollars. And so we really enjoy working with founders who have a similar mindset in terms of longevity, and we hope to co-create those types of businesses over the long term. So really excited to be here. Thanks for having me.
Hi, I'm Sheetal. I'm a general partner at Global Health Impact Fund. Global Health Impact Fund was started 5 years ago. Our focus is primarily in the healthcare space. We focus on digital health, medical devices, telemedicine, and healthcare platforms. How we operate, what we started was originally as a network of clinicians, which has now grown to be a 2,000-strong network of healthcare professionals. This network was formed with an idea of clinicians who can come in one place and discuss investments, innovations in medical tech, and how to contribute to this technology. That gave rise to the venture fund, which was the next part. So our unique aspect is our LPs are actively involved in our portfolio companies as advisors and support them in the further growth plans, and that is how we operate. We recently launched our new fund last year with a similar focus, but this time we'll also be looking at Series A. Our previous fund was focused on pre-seed and seed, but this time we're also looking at Series A. Our check sizes can go anywhere from $500,000 to $2 million. Thank you.
All right. This panel is entitled Venture Capital Panel, What's Hot in 2024. So before we talk about 2024, let's look back at 2023, set the table. How was 2023 on a micro and macro level? What stood out? Anybody?
Seriously?
Seriously.
Well, obviously, at a macro level, unless you've been asleep, there are a few things that have been going on out there, right? You know. So
tell us.
So the great news, actually, for I think all of us, is that venture capital is not short-term investing. And so our limited partners, they are not thinking in terms of this month, this year, in terms of what's going on. They're thinking in terms of 5, 10, 20, 40 years out. So in terms of, the macro and sort of that side of the world, it's been very interesting, the difference between reading the news and talking to our LPs. So at the micro level, part of what has happened, though, is because of a whole bunch of factors. As someone once said, the tourists have left, right? So there was a massive exodus of the sort of marginal funding in venture capital, from the later stage, the PEs, the mutual fund guys. And, because venture capital is such a small asset class, those guys make a big difference in terms of the amount of money out there. And then everybody says, well, wait a minute, there's all that dry powder. What about all your dry powder? That's a false hope to think that, all of our dry powder is necessarily, going to be flooding into the market to make up for the fact that, the big guys have backed away. But at a micro level, fortunately, it was not, it was nothing close to being a disaster. But, it's depending on which sector you're in, you actually did okay. But some sectors got whacked more than others, and I'll let my colleagues talk more.
So maybe before we talk about 23, we should talk about what started in 22, which is a lot of geopolitical uncertainties, quantitative tightening by the Feds, and just again a reshuffling of the entire supply chain thanks to all this geopolitical upheaval that happened. And 2023 was the after effects of all of that, right? So we saw quantitative tightening continue, wars still continue, a lot of geopolitical unrest kind of keep going up. So from the macro level, that had an impact on capital flows, that had an impact on venture capital itself. At the micro level, within our portfolio companies, 2022 was about, how helping our portfolio companies really how to brace the scenario. A lot of our companies needed to get to cash flow break even. So not every company can do that easily. And so working with our portfolio companies, finding really interesting ways to get to cash flow break even, giving some additional cushion if they need, in terms of bridge financing, maybe restructuring some debt terms. So those are some of the things that was about 2023, sorry.
Yeah, I agree. I actually think we've seen something of an implosion in the venture capital market with the funds exiting. A lot of funds have exited the market, which is good in a way, not good when you're out there trying to raise money. And there's this whole liquidity crunch that's really stopped the wheels from grinding. When IPOs stopped, the money stops flowing, and the limited partners, those big pension funds, endowments, on, big institutions that need the capital for their plans, they can't re-up, or they re-up more slowly, they don't add new managers, and that just trickles all the way down to you trying to get funding at the end of the day. So it kind of did stop everything. I think that's finally kind of washing out. We may not see liquidity coming till 2025 if the M&A market gets better, IPOs start to come. So, we talked about what's going on in venture, which affects you. On the ground, dealing with our deal flow didn't change. 6,000 companies a year we look at. We try to do 5 to 7 investments. We did 2 because the nature of the investments, most of the big checks were stopped to support the portfolio companies and see what was happening with enterprise sales headwinds and so forth. We just found the rounds didn't make sense. There were a lot of what we call zombie companies. So 2023 was the year of zombie companies. And what I mean by that is companies that may be very good in terms of their product and technology, but based on their past fundraising, were sitting at high valuations with inside investors who didn't want to write them down. And so we're continuing to pile money into it just to keep the doors open. That makes it really hard for new money to come in and justify the investment. So I would say, 2023, year of the zombie, still seeing that, but hoping we're at the tail end of that. But I guess we don't want to jump to 2024 just yet. So.
I think a lot has been shared already. I think just from like a practical investing standpoint, at least what we saw was the manifestation of a lot of the things that were shared, which is in the first 6 to 9 months of 2023, activity was quite slow. And again, it wasn't like the deal flow itself was slow, but that the investors were cautious, founders were cautious, everyone was very cautious trying to figure out what the new normal was. And I think post Labor Day or so is when things really started to pick up again. And in general, it seems like there's a very large bifurcation of outcomes in terms of fundraising events where it's like the haves are doing totally fine and the have-nots are really starving. And so if you have a great company that's performing really well in an area that a lot of investors also agree to be a sector or a vertical that is exciting, those companies seem to have no problem raising capital at reasonably premium valuations. And maybe if you have a domain that ends in AI, you get another markup because you are an AI company. And then the companies that did not do so well sort of navigating the downturn or the economic uncertainty certainly had some more troubles raising capital. And so I think that will likely continue, and that's something that we started to see again in January as well, and I guess we'll go into the 2024 topic soon, but that bifurcation was definitely noticeable in the latter half of last year.
I'll add to this piece from a healthcare perspective, since that's where our VC firm focuses in. So pandemic definitely changed healthcare scenario for good. A lot of digital health, telemedicine startups cropped up in 21, 22. And 2023 was the year that we saw for the first time what is the sustainability of the change that came about. Digital health definitely grew in this space a little more sustainably, a little more reasonably than it had in the previous years. And this trend will continue, which is where the area where we operate in. Having said that, I also agree with Jennifer's point. There was definitely been a liquidity crisis. So when we launched our new fund, we were a little apprehensive, and yes, it has been a very slow takeoff. Hoping 2024 would be a better year, but it's more likely things would be a little more close to what we refer to as normal. To be honest, it's never going to be the same normal ever again, post-pandemic. But from liquidity and economic front, hopefully 25 or 26.
Well, so let's talk about 2024. So there's a lot of hype out there, supposedly. There's AI, climate tech is in the news, social media is all of a sudden being talked about, quantum computing, et cetera, et cetera, et cetera. So pick something that you want to talk about in any order. It doesn't have to be Bill next.
All right, maybe I'll go first. So one thing that we missed in 2023, ChatGPT. That's what happened in 2023. And what we see in 2024 is really the opportunity that is opened up by generative AI. And this is kind of really a remarkable moment in history because for the first time you're looking at generative AI where you can actually be involved in being able to be it text or image or even video. You can actually put your creative thoughts and very easily start generating output, and even some of with very little training, and that has opened up amazing opportunities for startups to come in. So what we will see, and what we have already started seeing, is a boom in productivity improvements, and we see a lot in consumer and smaller businesses, but slowly this is starting to go into larger and larger enterprises. And that is where we see both opportunities, there are a lot of risks associated with it, and that brings additional opportunities for startups to go into them and tackle them. So that's what we expect in 2024. One additional thing that happened towards the end of 2023 is that we started the effects of quantitative tightening actually start taking effect. So now the Feds have started to signal that the rates may actually start going down. And that has inserted a bit of optimism into the market, and slowly you see a lot of startup funding picking up, as well as public markets getting more optimistic. That has a trickle-down effect on the venture capital and the alternative asset market as well. And so a bit of optimism coming into 2024.
Can I push back on Yash here? No, I'm generative AI it's cool, yeah, okay, fine, but I just don't think it's investable. I mean, either you're at one end of the spectrum and you're one of the very few companies that is insanely overvalued and everybody's chasing, or you're at the other end of the spectrum and you're using generative AI to do another app. And so we're going to have an explosion of generative AI apps. But the problem is that, we're close to the point where every, at least college student, maybe almost high school student, can launch a generative AI app over the weekend. And so how does that become sort of defensible other than just the lottery, right? So when Snapchat came out, they launched it literally over the weekend. It became a unicorn, but the 1,000 other Snapchats that college students tried to launch, you don't hear about those, right? So now, if you're lucky enough to be the guy who invested in Snapchat, God bless. If you're lucky enough to be the entrepreneur who launched the Snapchat, maybe you can build a unicorn. But I'll tell you guys, we have not seen a generative AI deal that we like. We've seen 1 million generative AI deals, and either they're insanely overvalued, right, or there's no defensible moat there. And so I'm struggling. We have these arguments, but okay, I don't know. Anybody else want to take this on?
I agree with both of you, I guess. This whole market reminds me of the mobile market 15 years ago. Everybody was building a mobile app, commoditized very quickly in certain areas, couldn't figure out where to make money. We had all these freemium to premium things that smashed and burned. But there were companies that made billions of dollars, right? And how do you get the enterprise to go mobile? And what products will drive real business value, that drive revenue, that makes it investable? That's how we look at it. So it's early, but a lot of innovation. But I agree. There's fast, very rapid commoditization on one end, but going to be really big winners on the other end, maybe disrupting those top 7 that drive the entire stock market today, right? We see Google not sure how to react with ChatGPT. Things are getting shaken up, just like the mobile market shook the world up 15 years ago. So that's what I see happening.
So if I may add to that, so, people underestimate the change in the long term and overestimated the change in the short term, right? If you were to wind back 10 years ago, how many,
Everybody says this. Oh, they underestimate that. I mean, go back 20 years and tell me, what did we underestimate? Did you think, 20 years ago, did you think it would take till 2020 in order to get a decent language model? No, no. 20 years ago, we thought 5, 6, 7, 8 years from now, we'll have computers that can speak intelligently and respond to us and can write code.
So let's take an example of the mobile phones, okay?
Right.
So if you rewind 20 years ago, people were still working on desktop PCs. And how many of you here have desktop PCs here? And
I'm sorry.
And how many of you actually use it? So for me, this
changed
is
my
where
world.
this is you. I saw you using this iPhones, right? This is where I do 100% of my work these days. This is what mobile phones did to you. This is what applications
Right,
that
but
was
you understand,
created.
20 years ago, we assumed this would happen. And now, here we are. I mean, I don't know how many of you guys remember 20 years ago, but you do remember WAP? The smartphone internet access, right? So we were starting, we had a whole bunch of companies that were building apps for phones in 2020 in order to access the internet over telephones. So, we knew it was really early, it was really clunky, it was really slow, but God bless, by 2010, we would have, good smartphone internet access. So, okay, right? But how has it changed
Bill,
your
what's
life?
wrong with what's wrong with phones and apps and innovation? And the companies like Snapchat and Instagram and Meta, they came up. They built jobs. How many of you work in those companies right now? So that is what is the basis of venture capital. We find opportunities, we invest, those companies grow, and they become bigger, and the next set of companies, next wave of innovation that keeps coming. So this is a new wave, and new set of applications are coming. So there is no wrong in that. That's what keeps our jobs.
Well,
But the issue is, where do you invest and make money, right? Do you in smartphone apps? No?
We made money in smartphone apps and became very successful, right?
well, let's shift gears for a little bit.
Actually, both of you are right.
Well,
The thing is,
Sheetal,
yes,
you're-
Bill, there is a lot of clutter that is there in AI. There is definitely. I mean, honestly, we do struggle a lot. Which is a good startup to invest in? There's so many of them. But AI is not something that came up in recently. It has been around, and it is here to stay. It is going to improve, and it is going to get better and better. Oh, it is going to get better and better. There will be better startups, and we will be able to choose and select and invest in them. But I also agree with Bill. We are a little overwhelmed. It's like every second day there is a new startup, there is a new college kid with a new AI app, and we're like, okay. And the next day there is yet another one. I think this will continue for some time before it cleans up and we can invest comfortably. So, yeah.
And if any of you are building those apps, come talk to me. I would like to talk to you.
Well, let's just talk about something practical. So there are entrepreneurs in the audience. Some of them are looking for funding. So what guidance can you give them for getting funded in 2024? Because things have changed, right? Can we have some besides Bill start? I'm just kidding.
Okay.
No, I'm happy to start. I mean, I'll continue the AI theme in relation to this topic where it feels like there are some companies or founders who feel like it's almost a necessity to add the AI language to the pitch or the product because it's sort of the big thing right now. And what we would encourage founders to focus on is just really using and leveraging AI to augment what you're trying to do, which is to really provide value to your customers. And if AI allows you to do that in a much more powerful way, it is a wonderful tool that you can leverage. But it shouldn't be the other way around. It shouldn't be that I need to use AI to get funding and let me find a use case for it. And so I think from an AI topic standpoint and getting funding / creating a real valuable company standpoint, just going back to the basics of how do we create something that this world needs and the target demographic really wants, like starting from that and then creating something that leverages maybe AI would be the right path that we would encourage everyone to think about.
Okay, I got to change away from AI for just a moment. So, obviously, it's a hot segment area, a hot topic. There are others. You mentioned quantum, although it's very early. I think we're going to see a huge hype wave for quantum later this year, next year, similar to what we're seeing for AI, and we'll all be trying to figure out what's real. I think regardless what sector, what focus, growth is what we want to see in 2024. We don't want to see flat revenue. We want to see triple growth and double growth and double growth to show that your company, your business can really scale up. If you're pre-revenue, getting to your viable product, getting to your first customers as capital efficient as possible so that you retain enough ownership of your company to be able to go raise at fair valuations, bring on the right investors to then get to those growth cycles. But I'm looking for growth, whether it's HR tech, cybersecurity. We stick to enterprise and B2B models, but that's what I'm hoping to see in 2024, and a lot fewer bridge rounds in early growth. I think we'll see bridge rounds in later stage for companies that have cleaned up financially that need a little bit more to get to that IPO. But I think I beat that like to a dead horse. I'm so sick of bridge rounds. But companies that are growing, regardless of sector, that are showing real business value, paying customers, the right teams, that's what I think will be hot in 2024 after what we saw in 2023.
So just to add to a few things there, I invest in enterprise technologies. And in enterprise technologies, AI is a force multiplier. But only one form of AI doesn't work. You need to bring in different forms of AI and it's mostly multimodal AI that you need to penetrate enterprises. But just AI doesn't really work. You need to really get into the workflows. You need to understand what are the tasks that need to be automated and get into those tasks, because that has a very high correlation to usability. Because you don't want to build a solution that is used only once in a day. You want people to spend 8 to 5, 9 to 5, how many hours they work on your product. So you need to get into the workflow automation. And the third important piece of this is data. So you really need to think about the data that goes into these AI algorithms. How do you architect those data? The data privacy and the ethics around it. Is there bias in your data? Are your models biased? So you need to think about data holistically. So you need to think about AI, workflow automation, and data all coming together in a full stack vertical solution. Once you think about it in that perspective, you can disrupt even some of the most legacy industries. And that's the opportunity that I see for 2024 and beyond.
So I want to agree enthusiastically with my colleague, Yash. So one of the things that we do at Pegasus is we run this global competition for startups called Startup World Cup. So we've run these regional competitions in over 70 innovation hubs around the world. So I happened to be at one of these events in Europe last year, and we had 12 startups pitch. And at the end, I was like stunned because none of them mentioned AI. And I thought, oh my God, is Europe so far behind? How can this possibly be? And so I asked them, I didn't hear any of you mention AI. And they said, and I said, are you guys using it? And they, oh yeah, we all use AI. We go, well, how many of you use it? Like 11 of the 12 had AI at the core. Oh, why you never mentioned it? Well, yeah, I mean, everybody uses AI. Why would you mention that? It's like we mentioned that we use computers, we use software. I mean, why would we talk about AI? It's core to what we're doing. It was really interesting that, and it's part of my whole commoditization. But to your whole point, the whole point is, can you use it to differentiate yourself in a way that delivers an extraordinarily compelling value proposition that nobody else can deliver? And that's the hard part these days. Being able to build something that nobody else can build to deliver value that nobody else can deliver. And that's kind of, I think, our big thing in terms of what we want to see from entrepreneurs is, stop talking about your technology. Stop talking about your product. Stop talking about your tech stack, and talk about you can deliver 10x the value proposition to a target customer group that nobody else can do. And that's, sort of what I think the big message in terms of where AI fits and where any technology fits and what entrepreneurs need to be doing to get investors.
Let's switch gears a little bit. Social media is under a lot of scrutiny, to say the least, lately. Ted, does Altos invest in media tech, and any thoughts on that? Social media?
Do we invest in social media? I mean, I think social media as like an investing category was an area of interest from an investing and entrepreneurial standpoint maybe 5, 7, 10 years ago. And so like from a net new investment standpoint, it is something that is a little bit harder to find a new form of social media that we've been excited about. But we do see a lot of interesting trends as we look at our portfolio companies leveraging quote unquote social media in terms of how they reach their customers. And so in the past, a lot of paid advertising was through Google, Facebook, Instagram. We now see a lot of interesting experiments on TikTok, influencers. There's a very interesting new wave of reaching your customers leveraging social media in a new form, in a new sense. And so the social media maybe 1.0 era was the Facebook era, and a lot of the things around that was what the advertising model was built around. And now we do have a bit of a new form of social media that a lot of our companies are leveraging to reach their customers. Whether there's another social media platform that arises, who knows? We'll obviously be on the lookout for that. But that is one thing that we see, at least from like an operational standpoint, that we've been intrigued by.
Sheetal, you want to talk about
Yes.
health tech? Or
I was
that
actually
first, and you can talk about health tech since you're in the health tech space.
So I was actually going to talk about the network. The whole idea about how we came into being was we realized that the clinicians that we deal with who are investors in our fund actually do not have a platform where they interact to talk about investments or anything beyond their work or their day-to-day routine activities. And that was how the Global Health Impact Network was formed. Today, where we are seeing, and we are hoping to take this network to over 100,000 healthcare professionals, where these discussions happen actively. It is a form of social media that we are actively promoting, where all our investors, portfolio companies, and even VC funds are on the same platform where there's daily interaction on what is going on in the trends, in the healthcare space, or even in certain areas, alternative medicine and other aspects. And this is a platform that our portfolio companies love to use. It gives them so much of intellectual inputs for their products as well as further growth enhancements. So this is something that has worked really well for us.
Well, let's switch gears. ESG, DEI, I think there's a lot of acronyms, but they're kind of related. But diversity, equity, and inclusion, environmental, social, and governance investing. It's 2024. We're very progressive. Anyway, your thoughts on ESG and DEI?
If I may.
Go ahead, Bill.
No, I mean, so it's been very interesting because we're driven by our corporate partners and their mandates And, every single multinational corporation has got some core mandate around ESG, around CSR, around DEI, around, SDGs. We forgot SDGs. And so we've sustainable development goals. Okay.
Japan, very Japan.
So it's right. So all these companies are in addition to smart manufacturing and smart buildings and smart transportation and smart all this stuff. They also have an overlay that they've got to focus on, which is broadly speaking decarbonization, but a bunch of other factors that they have to pay attention to. And interestingly, up until just a couple of years ago, there was a lot of talk about all this stuff. There was a lot of talk about, the net zeros and the decarbonizations and all that stuff. The heat is really on for these companies now. And so the pressure is really on us to be finding these technologies and these companies that will help them with that. And so it is, and if you look at the statistics, this category, particularly climate tech and decarbonization, is pretty strong through 23 compared to a lot of other categories. And so partly because of that, to your point, and to you guys, 2023, we invested in more companies than we've ever invested in any one year. And, we're expecting to invest in even more. I'm technically not supposed to say, but it's in the high 20s, right, in terms of the number of deals we did last year. And so we're expecting to do even more. So I think this aspect of sort of what's going on in the world is in fact an important tailwind for a lot of investment.
So I'm going to talk about the E and the G over there. So it's an amazing opportunity to innovate right now. I'll give you 3 examples. One of our companies is using satellite data to figure out where wildfire risks are and helping utilities cut trees. And this is helping prevent forest fires in 48 of the 50 states in the United States. Another company is using robotics to pick your low density plastics, your glass bottles, your aluminum cans from the material recycling facilities. Otherwise, they end up in a landfill. Another company uses a lot of robotics to help you increase your longevity in your workforce. It gives you an exoskeleton that you can, if you're lifting weights, if you're in your warehouses lifting weights, it helps you relieve your body. Right? So these are real opportunities where with a human-centric approach, you can increase the ESG goals, you can do better in those. And the second opportunity is in the G part, which is especially with AI coming in. I mentioned this briefly before. There is a lot of bias in the data sets companies use. Models can be biased, and this has huge impact on the overall outcomes that you can deliver. So there is a very important need and as well as an opportunity to innovate here, to have a right governance framework for your AI models. And we have created what is called an EAIGG. It's a mouthful, but Ethical AI Governance Group. It's a not-for-profit. There are about 2,000 members and 200 corporates who are now part of this not-for-profit group, which are kind of giving a maturity model so that even startups, right from their day one, can use this ethical AI maturity model and start doing something, because this cannot be an afterthought. You need to think about it right from day one. So these are the 2 things that we are doing.
Yeah, I totally agree. It's been maybe quieter, less hypey, but there's a lot going on. And to add to that, there's I guess it's the G side, G for E, compliance, regulation, reporting, all the tools and services that need to support those aspects. Europe has a lot of regulations coming down, for example, and companies need to be able to report on it. Even if a company isn't being government regulated, but it's a huge initiative, they still need to report on the impact, the effect they're making. So we're seeing a lot of things pop up around that infrastructure, kind of reg tech, and it's interesting. It's not going away. I have an 18-year-old going through college applications right now. I'm stunned by the number of schools that have sustainability, climate as a core part of their programming now. It's important to that generation, and those are the jobs they're going to be out there seeking.
The only thing I would just add is, we think these concepts are extremely important things for us to focus on as a society and whatnot. But as a firm, we don't have like a DEI-specific investing theme or an initiative. But what we do always emphasize is that we hope all of the companies that we invest in are contributing to these efforts in one way or the other, and they have the DEI or ESG type mindset in building their products and serving their customers in a way that is additive in these dimensions. And so, for instance, financial inclusion has been a theme that we've really backed behind, and these are generally fintech companies or technology software companies that are trying to bring the mass population into the financial world and people who have traditionally been underbanked. And so we really like that thesis of technology empowering people who were left behind in the past. Whether that's a DEI-specific investment, I don't know if that's how we would characterize it, but it certainly is contributing to moving our society in a positive direction in our view. And so we would hope that whatever endeavor you're on, you would consider these things as core to what you're doing, such that you're almost inadvertently becoming a DEI or ESG company.
And in our case, since we primarily invest in healthcare, our aim is definitely we see that the companies that we invest in, are they contributing to a better quality of life for the patients? Are they helping, supporting the physicians in their work? There's enough being spoken about American healthcare system and how much we wish to see it change and improve. And that is something that we definitely keep an eye out. I mean, it has been our core right from day one, and it will continue in that sphere.
We have a few minutes left for this discussion, but I want to point out that we've had many of these panel discussion events online during the pandemic, and some of you have participated. And I like doing those because they're really easy to do compared to these in-person events. And it was concluded that it was possible to build trust, credibility, trusting relationships, and do business on Zoom without flying all over the world, Bill, and meeting people. And haven't we concluded that flying is not good for the environment? So if it can be done virtually, why is it every time I invite Bill Reichert to a panel, I get an email message that says, I am in beautiful, name 100 other countries. So can you do business on Zoom and save the earth? And Sheetal, you run a global health impact fund.
So I'm surprised it took a pandemic for us to realize that we can do business virtually. As in, we didn't have to wait for so long. We already had the technology. Zoom existed way earlier. It did not have to be a virus that made us realize that we can we can do business virtually. However, I do not believe that doing business virtually can replace the in-person touch. I'll give an example from my personal life. Our fund is completely virtual. We all of us operate remotely. But once a week, I'll barge into my managing partner's home and we convert his living room into our office. And that is extremely important for us to ensure the functioning of how we operate. So I believe the hybrid model is here to stay. Yes, flying across the world is not environmentally friendly, but it cannot be eliminated completely. It can be reduced. So we don't have to zip around all the time, and we don't have to be on a flight from Monday to Friday. But I feel it's a hybrid model that is here to stay.
Yeah, I think we would agree. I think we find the in-person interactions to be quite important. Part of it is that our investing philosophy is to take these very long-term approaches to company building. And so investing in a business is like a marriage. Like, it's a very long-term engagement, and it's very difficult to get married over Zoom. And so I think we really appreciate the opportunity to meet founders and entrepreneurs in person to the extent that we can. I do agree that some of the interactions can be done over Zoom. Maybe it's the first interaction, maybe it's some of the diligence sessions that can be done through a virtual meeting. But even last week, where we decided to partner with the founder, after a series of Zoom meetings, we decided to meet up together. And so the founder flew up from Los Angeles to meet up with us. We had a full day session and then had dinner together. And that to us has been a very important part of the process, because we feel like it's a very important thing to do before we enter this relationship. And hopefully we can continue that, do more of it, but totally agree that some of the process can be done virtually.
We have a couple minutes before we go to the audience Q&A. It's a leap year. Yes, February 29th. It's a leap year. It's an election year. It's an Olympic year. Guess who's in the Super Bowl? So would you like to make a prediction about anything in 2024? And you're on camera. And then also, if you want to be contacted by anyone in the audience, give out your contact info. Your email address, your cell phone, your address, whatever, however you want to be contacted. Bill, you go first.
So, predictions for 2024. I do predict that the IPO market will reopen by the end of the year, but I predict that the stock market will be lower by the end of the year. How is that going to happen? Because I think we have this very, significant asymmetries within the way the stock market gets reported. But so that's, and then of course, the 49ers are going to win the Super Bowl. So, but that one was too easy. In terms of, again, we are extremely prolific investors, but we are also, unfortunately, it's just the harsh reality of life. We are also extremely picky investors, as is every venture capitalist. But I am eager and happy. I want to continue the conversation that I was having earlier with a couple of you. And if you want to get to me, my email is bill@pegasusventures.com. Pretty easy, and would be very easy to find if you know how to use the internet. So I will try to be responsive, but please, and this goes, I think, for every VC, look at what we do and show how you're relevant to what we do before you send something our way. Okay. So to the extent that I see that you've been paying attention, then I might actually open your email and read it and respond. If it looks like, I'm part of a broadcast list, then I'm probably just going to hit delete. And that's, I think, as you can probably guess, the way most VCs, have to operate. But thank you again, Rob, for letting us be here.
So in terms of predictions, I think the rates are going to start to go down towards mid to end of this year. So the deal activity will pick up, not by a lot, but much better than 2022 and 2023. And go Niners. So in terms of contacting me, it's Yash at my firm, bgv.vc, not com.vc. So feel free to write me an email and, like Bill said, make it relevant to what we do, enterprise AI, cross-border, early stage. And if it is relevant, definitely I'll get back to you.
So we're very long-term investors, as was pointed out earlier. So when it comes to the big global macro factors like elections, wars, we talk about this a lot. We found they're pandemics. They're actually pretty irrelevant to what we're doing on a day-to-day basis with our long-term view. The exception would be some of what the Federal Reserve might do, quantitative easing, and how that impacts things. We find it very irrelevant, the noise above us. Having said that, there are certain sectors that may look more promising when things happen, like defense and security are pretty strong right now for obvious reasons. The Super Bowl, I'm going to put my investor hat on for that. The big winners of the Super Bowl are the people that sold their tickets for an enormous profit to see that game live in Las Vegas. They're going for tens of thousands of dollars, and I wish I had one of those to sell myself. Contact easy Jennifer at mighty.capital. Always interested in hearing from you if you're looking to raise a Series A in the next 6, 9, 12 months. If you have a pitch deck you want to send in, we do read every single one. Deal flow at mighty.capital. And we encourage you to reach out as you're growing. Also encourage you to go to Products That Count. That's our global platform that will help you build better products. Think about your product strategy, which is so tied to your business strategy as you grow.
Yeah, we're really excited for the year, and I guess very similarly, we really focus on more of the micro than the macro, and our firm belief is that wonderful founders and wonderful companies can come in any type of economic cycle. And in fact, when there's a lot of uncertainty and whatnot, the people who are starting new businesses courageously are perhaps the most persevering and ones that we would be excited to work with over a long period of time as well. And so I think we continue to be excited about what is in stock for us in this year and years to come. And so in terms of the Super Bowl, I think there's a clear answer here given that we're in the Silicon Valley, but go Niners. And then contact-wise, my email is tae, at altos.vc. I look forward to hearing from all of you. Thank you for having me here.
For 2024, we feel global collaboration will definitely be much more at the forefront. Definitely as a firm, we are trying to look beyond US, not just for investors, but also for deal flow. And we feel this is a trend that is picking up and is here to stay. VC firms are going to go beyond geographies, beyond just looking at US firms only looking at US or European firms only looking at Europe. This is definitely going to change, and especially since now we are so well connected digitally, can operate virtually and remotely, this is only just going to improve and increase. And this is the trend that we also intend to jump on and tap into. I have no opinion on the Super Bowl. I'm really sorry. I am not really a big Super Bowl fan, but I will definitely watch the halftime show. That is something I'm looking forward to. I don't know why we are not talking about that part. How to get in touch with me? It's Sheetal at globalhealthimpactfund.com or LinkedIn. Thank you.
Right, let's give it up for our panel. So now it's time for audience Q&A. Walk up to the mic stand, ask away. This is not a pitch event, so do not deliver a pitch or a thinly disguised pitch. If you deliver a pitch or a thinly disguised pitch, you will have to deal with Joe, our bouncer. Enough said. First question. Go for it.
Hi, my name is Fernando. I work with ValueNext, but besides the point, my question is directed to each one of you. In your entire careers as a VC, what industry did you find to be the most interesting or transformative in your career?
It's easy for me.
Most exciting.
This one's really easy for me because, I got to lead our investment in SpaceX, and I will tell you, the most interesting site visit, of my entire VC career was going down to Hawthorne and kind of watching them build rockets, at SpaceX. So, and I do think, in addition to that, I do think it is extraordinarily interesting, the privatization of space, the enormous energy now that is going into space tech, and with SpaceX obviously leading the way. We are also investors in Axiom Space. If anybody knows Axiom is building sort of what will be the first private International Space Station in conjunction with NASA to succeed the International Space Station. And so for me, space technology has been the most interesting, exciting. I love all my children. and I got lots of other opportunities, but if I had to pick one, that would be where I would.
So I like the heavy asset industry. Probably space also fits into the same. I've seen like utilities spend $10 billion every year in to just do vegetation management. And nowadays, they were doing this with their heuristics, and today they use satellite data to kind of figure out when to cut trees, which trees to cut, and how often to cut. So that's an amazing transformation that I've seen in that industry, and less competitive.
It's pretty hard to beat SpaceX there, but I also love just,
Agree if you want.
personally interesting. I love deep tech too. I'm a geek at heart. I love deep tech, materials science, genomics. I mean, some of the amazing things you learn. That's the great thing about venture capital is the variety and the learning, the constant learning, and that's partly what draws us to it, is that sense of curiosity. But within my own portfolio, Airbnb was fun. Get to visit there, really cool people. So anyway, I'll let it move along.
Yeah, so many interesting areas. I think in general, like the software business model has just been so profoundly better than anyone had anticipated in terms of the capital efficiency and just the superiority of the business model itself and how compounding of an effect it can have over a long period of time if you create a software that really resonates with your constituents and you continue to create value for your customers. And so we're global generalist investors, but software has been an area that we've focused a lot on, and we continue to see so much opportunity despite software having been around for some time now.
It's a very easy enough answer. It's definitely healthcare because that is what we are focused on. But to answer that also, I'm not saying that because that is what my VC firm does. I chose to be a part of this firm because that is what I actually believe in. I've spent 20 years in this industry in different forms, being in biotech, pharmaceuticals, and now I'm looking at digital health. And VC is a part I actually love because of the variety and the breadth that I get to see. I also see great startups in the area of femtech, mental health, and cannabis is another area that is coming up, alternative medicine. So it's a very fascinating sector, and that is something I've chosen for the last 20 plus years.
Next question.
Hello, thanks for the panel. I'm Matías, energy tech entrepreneur. The question is, what makes you feel urgency from an entrepreneur or from a company to send a term sheet and don't say another term sheet? Sorry, I didn't get it. Again, what makes you feel urgency or what's compelling to you to send a term sheet to a company or an entrepreneur, but excluding the fact of them having a term sheet from another VC?
Well, again, I'm happy to chime in. The single fastest invite into our partner's room was company comes up to me at an event like this, walked up to me, and the entrepreneur said, Bill, what would you say if I told you we can accelerate big data analytics by a factor of 100x without changing your hardware? And I just blurted out the first thing that came to mind, which was, I'd say you're lying to me. And she did not blink an eye. She said, what if I told you we proved it last summer with Major League Baseball? And I said, I'd say come to our partners meeting next week. So, it's, again, the sense of urgency is an almost unbelievable but credible, right? We proved it in Major League Baseball. An unbelievably compelling value proposition. That's, you got to have an unbelievably compelling value proposition. Last week, a team walks into our office, and one of the founders is a Nobel Prize winner. That gets you going. That gets you going, right? So, in any case. You don't happen to have a Nobel Prize, do you?
I'm on it.
So we take our time. We are not the fastest investors. I would rather have Slow Ventures as a name, but some other VC firm has already taken it. Because for us, it's not just a one-way thing. It's a partnership, and it's about not just what the founders are doing, but what we can do for the founders as well. So we take our time. It's the relationship that we build. So we usually are pretty slow with our term sheets. So we are not the fastest ones to issue one.
We're the same way, very structured, disciplined underwriting process. One thing that might move us along, we also don't want to waste your time. And deal fatigue is something that can set in where you start to lose interest. So other than competing term sheets or trying to preempt somebody else, it would be like, let's get this done already because we have enormous conviction, along the lines of what Bill identified. But we've passed on deals where they're like, you got 2 days to make a decision. Like,
100%
we're not your right investor then.
I think for us, one of the most important things that we try to see in entrepreneurs is the authenticity of why you're working on the problem. Sometimes it's because you come from the industry and you saw the problem repeat itself over and over such that you needed to start the company to solve that problem. Other times it's through a very long and deep sense of studying the market to come to a realization, or at least a hypothesis, that this is something that you can do to change the course of what that industry looks like. And so when we feel that authenticity and that sense of passion to want to change something in an industry, I think that really captivates our thoughts of wanting to work with someone and want us to continue the conversation from there on.
We definitely look at what is the need that the team is trying to solve. And how well are they able to solve it better than their competition? That is the key to it. The more the crowded market is, the more differentiation we want to see. How do you set yourself apart? And if it is something unique that you have observed and you're trying to solve for, how is it that it has been missed by so many other startups in the past? Is it really a need, or is it something that actually doesn't need a solution? So what is it that you're solving is one of the most important aspects that we look at. And of course, yes, the team. How good are they at what they do?
Awesome. Thank you.
Next question.
Hello. My name is Ajay. I'm a founder in Carbon Accounting Climate Tech. I have a question about data and the use of AI at companies and enterprises. A lot of AI solutions are predictive in nature or generative in nature. So the results that are published cannot be explained. And companies really want to know how data is generated because they make a lot of important business decisions based on that. Do you see this as just becoming a barrier overall in the industry and it preventing adoption in a way, like it not being like AI not being adopted as much as it could have, just because there is no way to explain some of this is the nature of the data it generates itself,
Yeah, I mentioned this earlier about it's an opportunity because explainability in AI models is needed in some industries. For example, in financial, you need to explain how you came to a particular decision, otherwise you can get sued. But in some industries like marketing, you don't need. So it's very industry specific, but there is an opportunity for building explainable AI solutions.
Well, this one is for Bill. What if I told you that we do 1,000 times better in healthcare? To prevent blindness, and that's true, by the way.
Nice
But my question is more about early stage startups. So like you are VCs, right? What kind of traction you want to see in early stage startups in healthcare, in my case, to start raising the seed round, knowing like we are still pre-revenue? So like, how can you raise a seed round from VCs while being still pre-revenue? Knowing that you need that money for clinical studies.
We look at MVP. Have you built the MVP? I understand that revenue is not something that is close. You're obviously at the seed round, but is your MVP built? It is viable. It makes sense. That is the point where we would love to have a discussion. We do not invest in molecules. So if you're looking at clinical studies and that aspect, so we would not be the right VC for that. But having said that, there are very specialized healthcare VCs which do invest in molecules. And they would definitely invest even when you're at your first or second stage of clinical studies.
Okay, thank you.
And let me chime in on that because we do a lot of healthcare. I haven't talked about it much, but we've done 3 health tech deals in the last 3 months. And one of them is a company we spun out of a university. So, I mean, again, it's not just about traction, momentum, or even, in this case, MVP. It's about, conviction that this could make a dent in the universe. And so what's the evidence that you've got that this could make a dent in the universe? And that's really, really hard. In healthcare, there's all sorts of great ideas, but very few of them actually pan out, right? The great thing about healthcare is the promise is extremely compelling, right? Because you're saving lives or changing lives, right? But the percentages are tough. The percentages are tough. So to invest in a pre-seed, we've got to have a ton of confidence that there's a pony in there somewhere, and frequently one of the key aspects is going to be the unique intellectual property. So in healthcare, you can trade intellectual property, not so much in software, but so in some cases that's our sort of downside protection. Worst case, they've got some highly relevant patents or other intellectual property that somebody can use. So it's, just because you're pre-revenue doesn't mean you're out of the game, but you've got to have something amazing that's going to get the attention of the healthcare investor in terms of, the promise and the potential. It's the classic, if you've got a 1% chance of, 1,000x return, we'll make that bet, right? Thank you.
Hello, everyone. Thanks a lot for hosting such amazing panel. I actually have 2 to 3 questions. The first one is maybe a little bit tough. And what's the priority of the investment institution among the 3 or others? Social impact, quick monetization, and technology innovation. That's the first question.
Okay, let's start with one at a time. You want to manage this?
Well, let's just start with that first question. Someone besides Bill. Go.
I can go home now.
Tay, you want to say something?
I mean, if I had to choose, probably innovation, technology innovation.
For institution. Okay. Thank you so much.
I mean, they're all important, but
You had 2 other quick questions.
Okay. Following one is, how would you advise the founders who want to make social impact to benefit the world? Among those 3 options or something else, is that a step-by-step route, or we need to follow how the capital works would like to do?
So perhaps kind of think about it as if you're doing something on the social impact space. There are firms which are built to invest in that. They're like double bottom line. You see multiple ways to measure impact. But at the end of the day, you got to think about your solution as adding value to somebody, some group of people, right? If you can focus on that value, aided by technology, aided by some kind of an innovation, I think, there are investors who are ready to invest. So you got to find the right group of investors, especially the ones like impact funds and a lot of grants are also available. So, so if you're a social impact innovator, a lot of opportunities are there for sure.
Thank you so much. This 2 questions came from I know there's one prediction from MIT and other one of the big 4 predicting that whole world's gonna go into society collapse by 2045 or 48, and it's happening, and everyone knows that as well. People focus on ESG a lot and pollution, all of this, but the main reason is because people are really beneficial oriented. That's where those 2 questions is coming from, and that's why I want to just get into investment entrepreneurship. But I found there's a big conflict coming from this, and following question, the third one is, what about the biggest regret in their investment and why, and also what type of founders or the founding teams are like?
My biggest regret as an early investor, not with Mighty Capital, was investing in twice. I got burned twice. Investing in companies founded by friends of mine. I think a good general rule as an investor is don't invest in your friends because there's a bias there. And now that I step back and look at what they were doing, I'm like, what was I thinking? So that was my biggest mistake. I was biased in terms of how much I liked and believed in them and not doing enough work to validate the value proposition and the market dynamics of what they were doing. So that was mine.
Thank you so much.
My biggest regret was not investing in a company that was started by a friend of mine.
There you go.
So yeah, the founder of Bill.com is a friend. Well, still a friend. I guess he's still a friend. Whatever. $16 billion later, but so and then. My other big regret was my other big mistake was passing on Tesla. So that was tough in retrospect. But so I made up for it by investing in SpaceX. So that was okay.
Thank you.
Thank you.
We have time for one last question. Make it a good one.
Hello, my name is Jan. I'm from Spain. I study in Menlo College, in Menlo Park. We've talked about AI, we've talked about quantum, but I want to know, as your horizon is 5 to 10 years from now, even 20, what other disruptive technologies do you see that could change society trends or where our society is going? And also your opinion on how blockchain can give transparency into the visualization of assets under management of different banks that are not very transparent right now and might face liquidity problems, and how blockchain can solve that and the disruptive technologies that could change some other things in 10 to 15 years.
Somebody want to take blockchain? Come on, guys.
It's funny, blockchain didn't come up all night, did it? There are definitely some people predicting we're going to see a resurgence in blockchain. Ironically, we have a company who's in blockchain. They've just done a pivot to basically attribution and traceability, which is ironic when you think that it's about blockchain, which was meant to be kind of off ledger, off the grid. It's like, now how can we use it to build trust in social media, for example, in content attribution? So I think we could see that. But compared to AI and quantum, I don't think it's quite as fundamental a shift in terms of impact. Other things we could see are probably in the deep science realm, space, like I said, materials science, anything around solving the carbon problem.
Yeah, I think the only thing I would add is there are always these technology shifts that come, but maybe one thing that is also worth thinking through is the business model changes that come from it. So if you think about the subscription as a service business model that we have today in a lot of SaaS companies, a lot of it was enabled because of the cloud and because of the infrastructure that was laid to allow for real-time updates and the delivery of these services that was unable to be done in an on-premise world. And so as AI gets adopted, as quantum comes, like who knows what that world looks like, and I think we're all excited to see what that entails. But as entrepreneurs, I think it's really important to not only harness those technologies, but think about how do you actually deliver those services the most effectively to your customers. And some of that actually manifests itself into a business model change that maybe none of us actually even know today what that could look like, but hopefully that is something that these big technology waves can also have an impact on in terms of thinking about the business itself.
I'll answer this specifically from healthcare perspective, specifically from molecules. New molecules take over a decade to come to market, the clinical studies and the approval processes. One thing I definitely see in the next 15, 20 years, this process is going to shorten drastically. The technology that is coming up and that is coming our way is going to accelerate this process. And it's also going to improve the failure rate. The failure rate is extremely high. It's literally only success rate is in single digits. That is something that will change in the industry.
And I think probably, I'm going to go with Sheetal here. In terms of over the next 50 years, it's something that will have the biggest impact on our world, I think, is going to be sort of the extensions of CRISPR and biotech and synthetic biology. Because I think part of the solution to the climate tech issue is going to be biology. The energy issue is going to be biology. Health tech is, health is going to be biology. I think, food, biology. So I think, biology and, sort of extension of CRISPR and what they're doing in mRNA, and I think that'll be the most dramatic. And so can I use this as an opportunity to ask a favor of everyone in the room? Okay, I want to ask a favor of everyone in the room. I think, great question. What I want to hear from everyone in the room is, what do you think, back to the little battle we had here earlier about, technology trends and progress. What do you think was the most disruptive technology of the last 100 years? Disruptive in terms of really changing your life. Really changing the world. Okay, wait, okay, shh. Okay. So you all remember my email address. Subject, answers to VC Summit question, right? Okay. I'll share it with everybody. Most disruptive technology of the last 100 years. And what do you think is going to be the most disruptive technology of the next 50 years? I know that's asymmetric. I don't know, but 100 years is too long for the future. So what do you think is the most disruptive technology? So don't blurt it out now. I want you to think about it. I want you to argue with your friends, and I want you to send me an email, a very, very, very short email. Subject, answers to VC Summit questions. Most disruptive the last 100 years, most disruptive of the next 50 years. Is that an interesting question to any of you here? Okay.
All right. Well, let's give it up for our panel.